So I'm now inviting Vijay on the stage. Vijay. And Abhinav is part of the foundation. Most of you know him. He will be facilitating these conversations and we'll keep talking during the day. Thank you so much.
Hi Vijay, good morning.
Good morning.
Good morning everyone, and thank you so much for joining us today to start the day dedicated to navigating transitions. And why this theme, do we set the context very aptly, but let me just reiterate. Change is inevitable, as we know, and whether in business or in social sector, and it's happening in, faster than ever before. Corporate as well as NGOs leaders must navigate uncertainties, adapt to new risks, opportunities, and while ensuring sustainability and being true to the mission. So at first, both worlds seem very different, but one is driven by profits, one by social impact. But when we look closely, there are very striking resemblance and similarities. Businesses respond to changing market environments, consumer behavior. NGOs respond to shift in donor priorities, shifts in policy, and also the emerging needs of the community. Financial resilience again is important and critical for the survival of both, as well as the ability to adapt technologically, very critical. Also, last but not the least, like businesses cannot grow in isolation, they need strategic partnerships. So does NGOs. So, without further ado, in this context, Vijay, thank you. It's an honor to have you with us today. Dhruvi's already introduced you, so not introduce. But just for everybody else, Vijay has, spent over 25 years in the banking industry, leading transformations in strategy, digital innovation, and sustainability. So, thank you, Vijay. Thank you for your time, and it's great to have you with us.
Thank you for having me here. I'm very glad to see so many of you having traveled all the way from across India. I was glad to interact with some of you yesterday. I'm hoping to interact with the rest of you today, and I'm also hoping that you will benefit from interactions between all of you and some of the sessions that we have organized here, and look forward to 1 plus 1 being greater than 100, not just 2. Yeah.
Hey, thanks, Vijay. So let me just dive right into the first question. And as you know, transitions in both the corporate sector as well as in the development world, they require strategic foresight and adaptability. And you've led some major transformations throughout your career. Can you please share some leadership lessons from your experience in doing that?
Try. See, there was a book which begins with the sentence, life is difficult. Nothing is easy. For example, over the last 10-15 years, banking as a sector has invested most in information technology. I think there's no other industry which has invested so much in information technology. One would have expected productivity to improve. Productivity has actually come off. There are two things, or rather multiple things. One, people, consumers, customers, their preferences are changing. Two, there is a regulatory environment that's changing. And of course, we have several items such as climate, ecological state, and the interaction between countries, between political system versus people, the need for capitalism, the same time the need for interventions by government to ensure that the needy do get their share of opportunities. So the world is becoming complex, and in such a complex world, how do we first navigate? Forget about transition. How do we navigate, sustain, survive itself is a difficult task. And in fact, the top management of the organizations are spending 40% of the time on governance and items on compliance, regulation, sustainability, all of that. So coming to how can be potentially look at solving some of them. Not necessarily, see, a good decision does not necessarily mean good outcomes. They're very two different, very different things. You can make a very good decision, yet come out with a bad outcome. You can make a bad decision, yet come out with a good outcome. So I'm talking about what we can control is decision and the process of decision making. I think that there are three fundamental elements which can really alter or at least have some control over how we can transition: the people, process, and technology. On people, one obviously when it comes to things such as managing transition, managing sustainability, all of that requires a lot of alignment. And thankfully, regulation has helped us to a large extent in terms of bringing this alignment. There are of course several stakeholders which I will talk about, as we go along this chat. That forces some amount of alignment, and of course everything can't be external. We also have to ensure that the alignment happens, because that's the best, in terms of making the right decision. Alignment is one. Two, for example, we have introduced some of the great technology products for our customers as well as for internal staff. We have something called Access Deep Intelligence, which is Gen AI technology for our frontline staff to be able to, for example, when customers come asking for products, sometimes it could be relatively complex. For example, somebody is coming for wanting a forex card. A new frontline executive could take 30 minutes to call up few people and respond to the customer. Today, thanks to Adi, they can just respond to it in less than 5 minutes. So technology is very helpful, can reduce the pain for the frontline executive, can improve the customer experience. However, we are seeing that the adoption is low. That's because of the human tendency to not being able to manage change. Change management is also, self-obligation. It's not necessarily something that we ought to impose on people. And two, we also have a tool called Siddhi, which is a bank in the hands of frontline executives, while the adoption is much better. So the point is, adoption is not an easy, because it involves change management, and adaptation is also about how do I use any of this in the context of changing needs of the customer. So people are complex, because half the time we are thinking from head, the other half of the time probably we're thinking from heart. So many times we are taking decisions from emotions. Daniel Kahneman has spoken a lot about how we are system A and system B, how we are not so rational and all of that. So handling the critical part of this transition, which is people, is ever evolving. I don't think we have easy lessons there and easy ways out there. Processes, yes, easy to define. As we have learned over a period, we learn from our mistakes, we learn from somebody else's successes and also their mistakes. The central to processes is trying to reduce friction, make it simple without being simplistic. Make it as simpler as you can without being simplistic. The third is technology. I think if you look at it, technology can be an equalizer. And the cost of technology is coming down. I believe that technology is probably the best way, I won't say it the only way, the best way to attain scale and at a cost that becomes manageable. I know everybody is at a different state of evolution. As I said, banks have invested most in technology, and banking customers today benefit. They don't have to come to branches, which is a great equalizer, and you can sit at home and do banking, which was unthinkable about 15-20 years ago. So I think between these three drivers, I would think that we have some control over managing transition, but in an ever-evolving space, if you look at it, the world has changed in the last 10 years as much as it has changed probably in the last 100 years. In the last 100 years, as much as it has changed 1,000 years before and so on and so forth. We also are still limbic, not limbic, right? We are 2 million year old as human beings, Homo sapiens, but the frontal cortex is very new, which is the thinking part of the brain. We still operate a lot from the back part of the brain, so it's always a conflict between the limbic and the frontal cortex, and yeah, it's complex, but I am hoping that these managing people, managing processes, and investing in technology should help us get there.
Thank you, thank you. Thank you for that, and I'm sure it resonates a lot of the people here because the development sector is so people-centric that it makes it all the more complex. So I'll move on to my second question, Vijay, which is we are seeing sustainability and philanthropy increasingly becoming central to corporate strategy. Something that was also spoken about in yesterday's plenary. Someone who's leading strategic programs and sustainability for a large corporate, how do you see corporates in general imbibing or adapting to this particular trend?
So I handle strategy, transformation, sustainability for the bank. Elon Musk asked a question to Agarwal, I forgot the first name, who was Twitter's CEO for a short period of time. Parag Agarwal, what have you got done last week? So there was no answer for it. Sometimes when I go back home up to the week, I ask this question myself. I say, what have I got done last week? I had to scratch my head. I'm not sure what I got done last week. So these are very amorphous: strategy, transformation, and sustainability. But let's come to how we could potentially manage. I'm not saying these are the only ways, but probably one way to manage. See, we have several stakeholders in the system. If you look at banks, they're highly regulated. That's because we are dealing with public money. It's not our money. Our equity is only about 10%, 90% or thereabouts is public money. Hence, there is need for regulation and hyper-regulation as well. And in a context like this, we are not working only for shareholders. They are important stakeholders. We are working for the regulator. We are working for our depositors. We are working for employees. We are obviously working for customers. We are working for several vendors that we work with, and of course we are working for the society at large and the ecological environment that we operate in. So anything that an organization does, commercialization is not necessarily bad. But obviously, all of this, if you put commercialization at the center of all of these stakeholders, then I think we would try and get some balance around it. Anything extreme is never good. So long as there are guardrails, the guardrails have to be one imposed because you're dealing with public money in our case. In every case, everybody works for shareholders, everybody works for stakeholders, which includes employees, customers, and all of them. So I think the guardrails are set, and capitalism, commercialization works very well. I don't want to use the word commercialization, more of capitalism works very well in trying to bring a balance, because they encourage efficiency, they encourage proper distribution of equity and capital and all of that. So whatever we do, whatever we think, whatever we plan, we always keep in mind all of these stakeholders, ensure that we are building our vision, strategy, policies, all of them around taking care of all of these stakeholders. And if you look at Axis Bank, we have House of Strategy, where we talk about growth, profitability, and sustainability. Sustainability is a key pillar for my title of sustainability is not just about CSR, ESG, etc. It actually talks about the sustainability in general, where how can we ensure that the good practices sustain and help all of these stakeholders, not just now, over a period of time.
Thanks, Vijay. So yeah, creating shared value is where the focus is. So that makes me move on to my next question. So you've, on one hand led some digital large-scale transformation projects and now leading sustainability. And this through this diverse and cross-sectional experience, what in your views are some untapped opportunities within the private sector, especially around fintech, digital innovation, that you think can drive social impact?
Look at the irony of this. In fact, the currencies in circulation in the economy is today more than it was pre-demonetization. And about 50% of digital transactions in the world happen in India. That's the irony. And that's exactly why I said it's a very complex world. People are complex. Incentives are very difficult to define. And how do I explain this irony that where UPI is ubiquitous and you can make a 10 rupee payment to somebody where you have bought vada pav from, and at the same time you have so much of currency in circulation. That said, digital is important. We cannot say that, oh, currency is back in circulation, so I'll stop investing in digital and technology. I think that's fundamentally, digital should be around three pillars. One is payments, which largely UPI does take care. Of course, I'm not saying that it's the end state. I would think that it's one way of the journey, and it has brought in a lot of convenience, reduced friction. Of course, there are consequences. I'm told that the toffee manufacturers are suffering a lot because earlier, when you went to a merchant, you would pay, and since the merchant did not have the change, they would give you a toffee. Today, because of UPI, you just pay exact amount, and this is actual data. I'm not making up something. So payments, any system, innovation will be around a lot of payments, bringing down friction. And if you look at, there is UPI Lite, right, where it doesn't even ask for your PIN. So today UPI Lite has a cap of 500 rupee per transaction. You can load 2,000 in the wallet. But I would believe that this will get bigger and bigger, because we are talking about largely friction-free, frictionless, or low-friction payment system. Two is how do we encourage savings, because that's fundamental to how investments can happen, fundamental to how sustainability can happen, because without savings, no family can sustain, no individual can sustain. So we are looking at several options to encourage people, to make people save. There are just term deposit products, there are recurring deposits, there are investment products, and you can start your SIPs, in very, very small quantums. How do I make it easy for people to save? Today, if you look at it, our mobile banking app has more adoption than our internet banking app. And that's because we have made it easy for people to use. The third is about, loans. I think these are fundamental things that, any fintech can think about. And if you look at India as a country where you have more people who are younger than older, of course this will change as the replacement rates come down. And these people do get a lot more influenced by the influencers. And buy now, pay later is a thing that's caught up with these people. So the loan products, how do we make it easy? At the same time, since we deal with public money, anybody who's in the business of lending are not dealing with their own money. They're largely borrowing or taking money from somebody else and on lending. So it will be around these three products that digital innovation has happened and will continue to happen. However, anything digital will come with risks. One is, if you look at it, the new act is going to come out around digital data privacy, and anybody who violates that can be penalized to the extent of 250 crore. So privacy, data privacy becomes central to how everybody will operate. And of course, as a bank, as a leading institution, we already started the process, and we think that that's central to how we will evolve our digital products. To cybersecurity, I think that's so central to how every digital evolution has to happen. Three, fraud risk. The innovation that's happening in the fraudster community is unbelievable, and we're trying to be ahead of the curve, but I don't think we will ever be ahead of the curve, because we are not into business of only fraud prevention, but there are communities of people who are only in the business of committing fraud, so they will always be ahead of the curve. But we are investing as much as every digital community is investing in zero trust architecture. For example, we are allowing people to switch off net banking, because I never use net banking, so I can switch off net banking so that nobody can use my net banking to do a transaction, fraudulent transaction that I am not authorized. We are also evolving there. For example, our sleeping time, say between 10 p.m. and 6 a.m., no transactions can happen in that. I can switch it off, and then at 6 a.m. it will switch it off back. So we will start bringing all of these to ensure that we put customer security, privacy, fraud prevention at the center of all of this. As we think about three products that are the pillars of digital innovation, these have to come with these guardrails of security, privacy, fraud prevention.
Thank you so much. I think the data privacy is also very sensitive subject presently in the development world. So thank you for that response. So that brings me to my last question, Vijay. And you've, like you said, you've been navigating transitions in your professional as well as believe personal life. We all do, and it has a deep impact on who we are as individuals. So would like you to share an anecdote or two from your journey, that really kind of had a deep impact on your professional or personal life.
I've been a career corporate banker, so this world is very new to me. I mean, not that I was not an observer, not that I was not a stakeholder, but managing this is very new to me. In corporate bank, what do? I could cut a 10,000 crore check to a largest corporation in the country, and I need to worry about how I can get the money back. And since I've given so much money, what other business can I get back from the customer? Of course, that's fundamental to any lending banking organization, because you make money by lending. So I was part of that, part of the banking where we used to manage that. And I used to not work here, but in another bank, the largest bank by market cap in the country. When I met Amitabh and I was having a conversation, so he asked, "What do you want to do?" I could have said, "No, I want to continue doing what I'm doing." But I said, "No, I want to do something else." So I said, I want to be, looking at transformation. So the conversation started, and it went on for about 3-4 months, and at the end of 6 months, I think I had the offer where I had the opportunity of the current role, and which is very different from what I've done in most part of my career. I've done supply chain, I've done digital transformation, I've done corporate lending, I've done trade financing, all of that, which are very central to how and what a bank does. But this part of it I had not done. And why did I do it? I was well comfortable. I had reached board -1 position in that organization. One was to be in the comfort zone. But I think there's a chat GPT 4.5 that is coming. which is typically ChatGPT 4 and all of that are very intelligent. They have great memory, reasoning abilities, and all of that. 4.5 is about emotional intelligence. It's very, very emotionally intelligent. The question was asked, what is the deepest truth? The deepest truth is that change is not only inevitable, but it is essential. And we have to throw ourselves into space where there is friction. So I said, let me throw myself into of course I didn't have ChatGPT 4.5 then, I'm just getting validated with what I did. I threw myself into a space where there was a lot of friction. I had to do a lot of learning, and I'm glad I took this decision. I think the world is changing, and if you don't want to change, it's going to get very unpleasant. And if you are aligned with how it is changing, I think we will enjoy the process, and we will come out as better individuals and better professionals. That's my experience, not Gyan. I think that's what I would do if there was an opportunity to change. I would change again. Of course, not jumping without adding value. Or I see a lot of people coming to interviews and think that I want to learn and grow. No, you can't learn and grow. You have to learn, you contribute and grow. The contribution is something that I would like to do, and then probably change and grow.
Hey, thank you, and thank you for. We are also glad that you took that decision. So with that, it was.
Time will tell.
So it's great. Thank you so much, Vijay, for your time, and it was a privilege. And I'm sure. I mean, I enjoyed this chat a lot, and I'm sure most of us in the audience as well. So with that, I would like to close this session, and thank you again for you and everyone else for listening in.
Thank you for the patient listening. Thank you.